analysis of what's moving the markets right now, trading education to help you build real skills beyond surface level tips and tricks, and live trade ideas, real-time recommendations you can act on immediately. Opening Playbook is a free daily live webinar. Your hosts of the show are Nathan and Graham. Nathan has over a decade of experience trading Forex, stocks, and beyond. He's worked with dozens of leading global experts on strategy development. He's obsessed with math and systematic edges in trading. He's the creator of the Income Machine, Overnight Options, and more. He's a husband, a dad of 7, and the publisher here at the pub. Graham Lindman is also an options expert with over a decade of market experience. He studied technical analysis under 2 of the top minds in finance. He developed wrap order option trades for cost-effective entries, as well as created lightning trades, moonshot alerts, NVIDIA Elite, Apex Indicator, and Newton. He's also a husband, a dad of 2, and the copy chief here at the pub. Now, a lot of people in the stock market education industry will tell you that trading is easy if you just know their quote-unquote secrets. Well, that's not us. We'll tell you the hard truth, which is that trading is complex and takes time to learn. But we make the learning process much easier. The Opening Playbook exists because a lot of traders have trouble succeeding because they believe many of the myths out there about the market and trading. We'll dispel those myths and equip you to become a better, more mature trader, giving you the opportunity to be more successful, whether that means using our systems, tools, and strategies, or just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. Now, it's important to remember that you should never trade with money that you can't afford to lose. Of course, nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please don't trade with money that you can't afford to lose. And let's be ultra clear, any type of trading involves losing some of your trades. It's inevitable. Controlling your risk will keep you in the game, and we can help you learn structures and strategies to do just that. Our promise is that we'll be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we believe you should always follow. And here are some rules of the road to get you started. Stay calm. Try to trade without emotion involved in your decisions. Go at your own pace. Don't try to keep up with us or other traders. And ask questions freely. We really do want to help in any way that we can. And to help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner I'm posting above. And for answering that quick survey, we'll give you custom content to better help you by using your feedback to improve our classes and education, and give you a free options cheat sheet, a digital, easy-to-understand options guide that will look something like this. Now, I'd like to give you some tips on using our webinar platform before we get started with our regular program. The button next to number 1 here, we call the hamburger button. That will collapse the green column on the left, and you can leave it collapsed because we don't use it for anything. Number 2 is the pause button. You can pause and resume the presentation whenever you'd like. Number 3 is the mute button. You can mute and unmute the presentation's audio. If you find that you suddenly lose audio during the presentation, make sure you haven't accidentally clicked or tapped on the mute button. Number 4 is the main announcements section, where trades that we take in the current session will be posted, as well as helpful links that can always be found there. Now, this section will only be visible if you're on a large screen. If you're on a mobile device, you won't see announcements here, but we do have another area that you can see them that we'll get to shortly. Number 5 is the toggle for going between light and dark mode, whichever you prefer. Number 6, the monitor icon will enlarge the presentation area without hiding the communications or chat area. Now, this button is shown in 2 places, and I highly recommend using this because it'll give you the best view of the presentation without hiding the chat from you. Number 7 is the picture in a picture button. This will reduce the presentation to a floating window so you can do other work behind it, such as go to your broker platform on a mobile device. Number 8 is the full screen icon. This button will enlarge the presentation to take up the entire screen, covering everything including the chat area. Number 7 and number 8 may or may not appear for you depending upon what device and browser you are using. Number 9 is the low latency button. Toggle this off if you're having any audio or video issues, such as buffering. Number 10, all the way on the right, is the communications area. This is where group chats, announcements, and private messages will appear depending upon the tab that you have selected above. At the bottom, number 11, is where you'll type your outgoing message. You can press enter or tap or click on the green arrow to send it. Number 12 is where you can start a private message to a host by tapping or hovering on one of their group chat messages and clicking the double speech bubble icon that appears. Now you can only private message hosts, not other attendees. At the top, number 13, that button will collapse the communications area, giving you a larger area for the presentation, but you won't see any of the communications that are going on. Number 14 is the group chat. This is where you'll read and write messages that the entire group can see, and this is the default tab that you'll see when you sign in. Number 15 is the announcements button. This is where you can see those same announcements that were in the larger area that we covered earlier, but this will be available whether you are on a mobile device or a larger screen. Number 16 is the private messages tab. This is where you can see any conversations that you have started with the hosts or they have started with you. And if you have a new message waiting for you, you'll see a red dot below this icon in the toolbar at the top. And last but not least, number 17 is the button that will pop out the communications area into its own window. This is useful if you have multiple screens and you want to go full screen on the presentation and view the chat in a separate screen. Now, we have a version of this guide that I just went through that you can view on your own. The URL to get to that guide is marketspg.com/wisepub, and there's now also a link to it in the announcements section. And that's it. So once again, welcome to Opening Playbook. Don't forget to complete that survey to get your free cheat sheet. And now we're going to play our theme song and get to the regular show at the top of the hour.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The Markets Playbook is finally here. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Charts are lighting up the morning sky. They spot the trends with a hawk side. Options and plays in a live display. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with a hawk side. And plays in a live display. Every move counts in the game they play. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. They break it down, no confusion, no spinning around. With every trade they set the tone, making big calls on their trading sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Well, good morning, everyone. Welcome to the opening playbook for Wednesday, April 1st. Happy Hump Day and April Fool's Day, although we won't be doing any of the fooling here on the show. Everything we give you will be honest and sincere. I know
Let's not get carried
Nathan.
away, Dave. Everything,
We
everything honest and sincere. I mean, come on. That feels
face
like
name.
that's.
Oh, there you go. Sorry. What did you just say?
I said everything honest and sincere. That feels like a little bit of a tall order.
Well, maybe that was
Everything?
the April Fool's.
Yeah, exactly.
That was the lie. That was the lie.
How's everyone doing? My kids were up until 1 o'clock in the morning. I could hear them planning their April Fools ideas. Um, it was ridiculous,
That's
but
adorable.
hopefully none of those find them their way in my direction.
Well, I was listening in on your 9:45 meeting, and then we also have some people here saying that it was hard to find. I know you addressed that in that meeting as well. So I went through that process that they went through, so we could talk about that after opening playbook and
Yeah, I was
maybe.
kind of bummed to hear that because I spent a whole bunch of time leading up to this with the whole idea of like, let's do the calendar thing and make it really, really easy for people to find this link every morning. And then a whole bunch of people said, hey, the link was kind of hard to find. I thought, oh no, you know. So I guess we will have to work on that, obviously. And let me know for those of you who meant to be in the 9:45 a.m. but didn't find it. Please let me know because we want to obviously address that going forward. For those of you who were in there, let me know if you're excited about the 10-minute members meetup going forward because I think it will be pretty awesome.
Yeah, a bunch of people. So you would have had a lot more people in there. Well, we'll get that worked out and make sure everybody
Interesting.
has it.
Yeah, that's bizarre. I was thinking, hey, this is going to be the easiest link to find ever, but I guess not so much. So I gotta. Sorry, I'm plugging in some numbers here because I realized that I want to do an updated trade example for what we're talking about today, and I'm just gonna basically set it up where I can fill it in for you in real time. So I need to update my numbers here.
All
Do
right.
you know if
Well,
Graham's jumping on?
I don't know.
Okay, I was
He
going to let
said
him lead
he
lead
didn't have any
today.
particular. I know he didn't contribute to the topics today, so I'm not sure if he was planning on being here.
All right. Well, I was going to steal some time by letting him lead us off today, but I guess it's on me, folks.
So
So
sorry.
give me 17 seconds and I'll be ready.
I can fill 10 of them. I tried to play the Nike earnings yesterday and would have been a good bit of money if I'd gotten in, but couldn't get the price I wanted. I stuck true to my limit order and my personal limit on what I was willing to spend on it, so I didn't get in. But would have made a pretty penny. I know Lance made over 300% on Nike puts yesterday, but I was playing a little safer with a two-way trade, but and would have made about 40% overnight. But
What I didn't even look how far did it end up moving.
oh, it tanked. It
Yeah.
tanked. Yeah.
It has a pretty good history of doing of doing so.
It tanked.
Um,
It was about like 50. It was between 50, depending upon whether you looked at Q4 or all of them. I was looking at your earnings
mhm.
tool. It was between 51 and 55%. So it wasn't like outright bullish or bearish. It was pretty 50-50, but the market maker move was well under the typical move. So I thought there was a good play there.
Yeah, I wonder what Nike has been like in the last couple of years because then historically a very good stock, obviously, but in recent times has not fared incredibly well. All right.
Mike G asked a great question. Whose day is it to watch Graham? Nobody knows where Graham is. We need to put an Amber
apparently
Alert out on Graham.
apparently it was my turn, so my bad on that. All right, let's jump in and do a quick overview of where we find ourselves. For those of you who said that you did not find the link to the members meetup, sorry about that. Like I said, I thought we actually had gone above and beyond to make it easy, and it turns out sometimes from our perspective, we think things are easy to find, and then we find out from members they are hard. So thank you for communicating. Sometimes we really literally don't know. We think, oh yeah, it was easy. So and so said they found it, and then we find out later, yeah, well, 100 people didn't find it. But we will try to update that. The best way, I think, from the people who found it, Larissa and a few others said once they got it invited to their calendar, it was easy. And that's really what I would recommend you do. Make sure you find that page where you can add it to your calendar, and then the link should be built in right there from that point. Because
there's still a lot of people who don't use calendars, and I think that's hard for those of us who use them to fathom, but there's still a lot of people out there who don't.
If you don't use a calendar, then maybe create an alert in your phone, or something else. I don't know. But the link was also there in hey guys, please don't post the members only link in the chat. It's the 9:45 is for members only. But yeah, maybe set a recurring reminder in your Telegram or in one click. But let's jump on to the overall broad view, which is another green day today. So up nicely. We have the SPY up about 0.6%. I think it peaked about 0.8%, fizzled out just a little bit. Q's up about 1%. Mags not following through quite as much as they were yesterday. Mags had a monster day yesterday, and I do think there's some more upside potential there if we do rotate at all to the upside. What you'll see, though, as I mentioned in Telegram, the thing that I would say is, I don't know if concerning is the right word, but shows that it is a little bit of a risk on appetite right now, is that the RSP is not following suit. So if you look at the sectors, for example, and this was true yesterday as well, you're definitely getting the outsized moves here in the more risk-on sectors. So technology and industrials, which have really been our two most aggressive sectors, are up significantly, while staples and energy, which of course have been risk off, are certainly not up, including energy, which is down over 3%. With the idea that conflict is potentially coming to an end, and now that is fading back to the downside. So we're seeing that right now. That shows me that it's more of a liquidity market. Obviously, as well, you're seeing gold up again, and so this is very much still liquidity. It's moving to the places where it was most pulled out of. So, in other words, we're not necessarily seeing any bias or direction, in my opinion, pop up in the market right now. There's no real indication of, hey, we believe in this from a value perspective. What we're seeing is the things that got a ton of liquidity pulled out of them, like the mags, like gold, like silver, they're getting liquidity pumped back in. The things that obviously had a ton of liquidity pumped in, like energy, and then more recently staples starting to get some, they're the ones that are fading off. So we don't have any real bias or direction, in my opinion, right now, but we at least do have overall positivity and liquidity. And if the market can, buy into this belief that we are getting closer to the end of conflict and things are looking up, then we'll probably maintain at least somewhat bullish, even though I'm sure we will have some bumps along the road, because I don't think we're out of the woods yet. One interesting thing to note right now is that the VIX really isn't collapsing a whole lot. It collapsed a ton yesterday, which I thought was a good sign, but then it didn't follow through on its collapse as much today. So that's, those market makers, again, had to react to some degree. Yesterday was a monster 3% up day. So obviously VIX was, had to crater to some extent, but now they're saying, okay, well, we're at a kind of a comfortable point in this 25 range. We're not going to let this thing drop down to 21 just because we have another back-to-back day. So we'll probably need a full week of positivity, which the week ends tomorrow. So that's really just 2 more market sessions with today and tomorrow for the VIX to continue grinding, and then a weekend without chaotic news. That's probably what we'll need for the VIX to be in the low 20s instead of the mid to high 20s. And there's a very good chance that we could get that, in my opinion. I would say that we've kind of shifted now, where it seemed like for a while 80% of news was going to be negative, because you could only get so many positive pieces of news, like, hey, the war's ending, but you could get all kinds of negative things like boots on the ground and ships being destroyed and lanes shut and so on and so forth. And now I do think we've shifted where it's kind of 50-50, where more confirmation that conflict is over, energy already hit such a high level that, it kind of naturally shifts where there could be more positive news than negative news. And so I think there's actually a pretty good case for that. Hey, we'll get, some quiet / bullishness, and maybe a quiet enough weekend where VIX can kind of chill out and we could be in the low 20s VIX tomorrow. Now, I certainly don't think we're out of the woods yet. From a technical standpoint, this could very much be a retest for a drop further. We looked at that on Closing Playbook yesterday. I would say that, and by the way, if you guys took the trade that I gave you early in the day yesterday, I mean, we're already basically there. We are there, actually. For those of you who are on Opening Playbook, where we were only about halfway up this candle, this is on the weekly chart, but if you guys were here on Opening Playbook, I didn't expect this to happen in one day, but we were only about halfway up in this candle, and I said, I think we're going to hit this 650 level. That was about 1.5% away. We covered that in 5 hours. So we're there. Now I think we're at that decision point, exactly what we talked about yesterday. The market's going to have to make a decision here. And it could, the range of outcomes are very, very wide right now. They're always wide in the stock market. But when the VIX has been pushing past 30 and the market has dropped as fast as it has, the range of outcomes becomes even wider. And so if we look at where we are right now, again, actually pushing towards 655, well, the range of outcomes goes from something like this, where we had an overcorrection, we made basically a dumb money flush, got back over 660, and now we're headed toward highs. Or it could just as easily look like this, which would be a cleaner technical move, and at least get back down into the 610. But we know that the market really likes this range, and we have a lot of transaction and business happening around the 660 level. So I think it could just as equally do this. You know what I mean? So there's no, in my opinion, kind of safe path yet. We have to see what price does right around the 650 to 660, that $10 1+% zone that we're right back in right now. To me, technically speaking, the cleanest action would be this, right back into this 610 zone. And if it wasn't for the war kind of catalyst-driven environment, I would feel pretty comfortable selling right here, because just from a technical standpoint, this is really nice price action that would give us a head start to get short again. But this is completely catalyst driven, news driven. So I don't think you can be super comfortable shorting it on the technical side. I still have some hedges on for this potential outcome, but my degree of confidence is not super high, just because of the conditions that we got here in. And you can see here's the 200 on the, there's the 200 SMA. So, another thing you could say, oh, well, maybe we'll go a little bit higher. We'll touch that moving average, and then we'll head right back down. Again, all of those conditions, in my opinion, are on the table. Just out of curiosity, Let me ask those in the chat. How many of you think the bottom is in for 2026 versus don't? Yes, if you think the bottom is in. No, if you think the bottom is not in. Keeping in mind that even though it's a little wild, and I would say that I still have to be a little bit bearish here, we did hit this March bottom, which is a pretty good historic place to find a bottom. I just think right now I can't quite get myself to be confident enough that it is. Lots of no's, lots and lots of no's. I mean, it seems like 90% of you guys are saying no, you don't think the bottom is in. I would have thought 50-50 would have said the bottom is in. Because personally, I think, maybe I'm 50-50 on whether the bottom is in. I would be surprised if we don't at least get some kind of pressure testing, even if it is the bottom, if we don't at least get some kind of pressure testing in this area. But we'll see. Cynthia said, doesn't that mean that it is? Well, Cynthia, you may be right, my friend. That is probably the best indication that it is in when people start saying, I can't take it anymore, we're going lower. And the market says, actually, haha, no, we're not. So we'll see. Chris says up to what Trump says. Yeah, probably truth in that as well. The trade that I want to give you today, you could do in the bullish or bearish direction. And I think right now I would lean toward the bearish direction, but I'm going to give you an asset in which I would do it in the bullish direction. So overall, I would say maybe bearish direction, but I would give you one ticker that we could do it more in the bullish direction. Carlene, tell me you don't still believe that the debt has anything to do with it. I thought we were mature Americans. We don't sneeze over little things like 39 trillion in debt. Come on. Let's be reasonable. Debt doesn't have anything to do with anything. We're mature 2026 modern societies. We don't let a little thing like debt get in our way. All right, so today we're going to talk about the ladder trade. Some of you guys have probably heard me. I think I've done this this lesson one time before, maybe 6 months ago or so. Well, Bodine, the private equity is maybe more concerning, but Carlene was talking about the U.S. debt, the 39 trillion U.S. debt. The private equity is probably more concerning, but I think that is overblown to some extent. I won't go down that whole rabbit trail right now. It is a concern for sure, but I think it's a little bit overblown because essentially, in my view, what's happened right now is that they've started safeguarding against that risk by putting, withdrawal limits and things like that, which sets off a ton of alarm bells. But I think they're doing that because of historical risk, 2008 type risk. And they're actually being, I think, a little bit more conservative in getting ahead of that. So while it's obviously a risk, and I would say the private equity is more a risk than the U.S. debt risk, although both are concerning, I actually think that even that is a little bit overinflated in terms of risk right now. Now, it can get a lot worse really, really fast, and that's the issue. But right now, I don't think we're at the, alarm bells totally ringing yet. I think they're just trying to get a little bit ahead of it. So anyway, definitely a lot of things to be concerned about, but keep in mind that's the reality of the stock market. There's always lots of things to be concerned about. What we have to try to do is kind of separate the timing of when those things matter and then the disassociation of the economy and the stock market itself, because that disassociation is getting wider and wider and wider, and we have to be mindful of that. But anyway, shifting gears, let's jump into the ladder trade. Now, for those of you who aren't familiar with debit spreads, you certainly would want to go back and watch my debit spread training first, because this is a more nuanced version of using debit spreads. But I think it's a really cool type of trade structure if you're in an environment where you want to be conservative and aggressive at the same time. So basically how this trade works is 3 debit spreads but it's one unified position. So we take 3 separate debit spreads, but we treat them as one trade in a ladder on the same stock. Each rung of the ladder targets a different probability and payout level, creating a blended risk profile, which is more resilient than a single trade. So basically, you have rung 1. That's what we would call our base trade. It's your highest probability and your most capital allocated trade. Then you have rung 2. That's your kind of medium probability. That's the one that you really want to hit. You want to hit 1 and 2 to make things work in a more effective way. And then you have rung 3, which is kind of your stretch trade. It's lower probability and less capital, but a higher ROI when it hits. Typically, the 3 rungs are going to work something like this. Again, rung 1 is more defensive. In other words, it's in the money or it's protected. The stock doesn't have to go anywhere in order for you to hit rung 1. That's a 40 to 60% ROI. Rung 2, it's 80 to 120% ROI. And then rung 3, that we call that like something like a jump trade. That would be a higher ROI, 160 to 240%, just as a general rule. This can fluctuate obviously differently, but those are generally speaking the ranges that you'll find for this ladder trade idea. Okay, so what is the actual idea of executing this trade? Well, the problem is if you like a stock and you believe it can move, but you don't necessarily want to play it directional, especially if the market is pretty uncertain, which we might agree that the market's fairly uncertain right now. But you also don't want to lower ROI if you're dead right and the stock rips. Anyone ever have that situation? Let me ask that question, because I actually find this situation to be fairly common when I'm looking at an opportunity. I kind of evaluate, I guess, well, I like the stock and I think it has some really good directional potential, but the market's pretty chaotic right now. I'm not sure I want to place an actual directional trade, but geez, if I'm exactly right, I really don't want to lose out completely. Am I the only one who ever finds themselves in that scenario where it's like, I like the stock, I think it's a good trade, I don't really want to put all my eggs in the directional basket, but at the same time, I don't want to miss out if I'm actually right? Well, that's really what this trade is completely designed to do. It lets you take a position where you avoid losing money if the stock goes sideways. You still do really well if it does move in your favor. So you're kind of splitting the difference with this ladder trade idea. So here are the rules. First, you have this base rung. The guidelines here are that both legs are fully in the money. That's if you do it as a debit spread. If you did it as a credit spread, well, both legs would be out of the money. Ideally, you're going to be about 1 ATR in the money, but about half an ATR is more standard. What's an ATR? That's the average range. In other words, you want to basically be protected based on how the stock typically moves. If the stock typically moves $5 on a daily basis, well, then you'd like to be about $5 in the money, underneath the price, protected. The guideline here is that it must pay at least a 40% ROI. Then you have rung number 2. We would call this a ramp order. If you're an opening playbook follower, an opening playbook a night, Dave, we really need a word. Opening playbook a night doesn't really roll off the tongue. But if you're an opening playbook follower, then you're probably familiar with wrap orders. This is where we wrap the price. So if Tesla's trading at 420, we trade at 415 and a 425. We're wrapping the price. And if it gets above that, it's going to be somewhere between an 80 and 120% ROI. In this case, we want it to be within 1 ATR. Again, we want it to be within the reasonable expected move of the stock. And the minimum there should be about 80% ROI. Rung number 3 is what we would consider like a jump trade or an elite trade. That's where we're going out of the money. Both legs are looking outside. We need the directional move, ideally less than 2 ATRs from the current price. Again, we don't need it to make a historic, never before seen move to be a winner. That's not ideal. And we should be paying at least 160% ROI on this rung number 3. Now, here's the idea. If you win all 3, of course, that's your best case scenario. That's what happens when the stock just rips directionally and you'll make a really good trade. If you win 2 out of 3, that's probably your most common outcome for a trade like this. You should still make a pretty nice trade. If you win 1 out of 3, well, you should still be okay. You'll still make a small profit. And if you lose all 3, well, no surprise, that's your worst case scenario. But keep in mind, even if you lose all 3 trades, you're treating it like one trade. So your risk should still be defined, and that should still be an okay outcome for you. Now, the common pushback I get when I explain this trade is, how could you justify the trade if you can still lose all 3? In other words, it's not like you're hedged on one of these positions. You could easily lose all 3 trades. Well, again, the critical thing is that we're treating this as one trade, as if it's one position. So if I'm going to risk $2,500 on a single trade, well, I would just split that same $2,500 into the 3 separate positions and treat them as one trade, one risk amount across all 3 trades. The difference is that your payoff profile improves dramatically versus a typical income style trade. So again, same exact risk, just a better net profitable structure. Okay, everyone see this? So basically, if you're willing to risk $2,500 on one trade, we're still risking $2,500 here. On the ladder trade, we're just doing it with $1,500, $700, and $300 split up. It's the same $2,500 risk. We're just increasing the net profit potential. SLM, I call this a ladder trade. I think I invented it, but I guess, I don't know, maybe someone on the internet has invented it before me. I'm not sure. But my version of it is what I'm explaining to you today, and I call it a ladder trade. That's why you get this idea of rungs. Rung 1, rung 2, rung 3. Those are the rungs of the ladder. So the rules we use when we set up a ladder trade is, number 1, we're always using the same stock. So this is not split up across different stocks. It's all the same stock, always the same expiration. We're opening them up right around the same time. Doesn't mean literally to the second, but right around the same time. Maybe you put one on and then 10 minutes later the next, 10 minutes the next, but ideally, 30 seconds the next, 30 seconds the next. And then you should really close them at the same time as well. There is some nuance there. You could manage them a little more creatively, but generally speaking, you are treating it like one trade, even though it's built with 3 different entries and 3 different positions. All right, let's go through the practical flow here of how you set up this ladder trade. First of all, you're going to find a stock you like. You're going to look for a stock that's in a solid position that can make a move, but ideally, you feel that it has a comfortable base. In other words, oh, SLM, sorry. Here I am, classic, thinking he's asking about my beautiful definition of a trade. Yeah, it will be 3 separate debit spreads or 3 separate verticals. My bad. Thank you, Dave. So we're looking for a stock that ideally is in a pretty good position where we at least think it doesn't have a ton of downside risk or downside potential. So your good picks are going to be solid base, clear trend, near support, but with also room to run to the upside. The stocks that we would want to avoid are basically a falling knife, really high IV, earnings trades, things like that. Okay, that's what separates the good and the bad here. Step 2 is we're going to pick our timeline. Basically, we want to give it enough time where we're actually getting some time decay on that initial rung, but obviously enough time that there's opportunity for the directional side to run, right? So basically the right balance between it probably won't move against me and I want to give it time to go up, right? That's the idea, because you have both a defensive trade and a directional trade. So you basically want to say, I want to give it a limited time to move against me, but enough time to go up. I find that 3 to 5 weeks is kind of the sweet spot here for this structure. Step 3, define the expected move. You can use the ATR to map your zone. You could even use the market maker move here. basically what you're determining is, well, how far does the stock move? Because if I'm trading Tesla or I'm trading, Ford Motors, they're going to move very differently, and I can't set up the same structure across those two trades. So I would advise using a simple ATR, or if you're an opening playbook VIP member, you can use the net ATR, which is 10 times better than the regular ATR, if I don't say so myself. But you can also just use the market maker move. Okay. So anything works, but you need a general idea of how much the stock moves. Ideally, your rung one is protected. It's inside a typical market maker move, or about half an ATR. Rung two is within one ATR to get your line in the sand for a full profit. Rung three is hopefully within two ATRs. Then number four, you got to determine what is your actual ROI potential. Again, it's going to fluctuate. Not every trade is going to be the same, so you have to map it out. Remember, your minimum ROIs are basically 40, 80, and 160 as a general guideline. I think that's a good guideline. What you need for that to happen on the first rung is price to stay flat or go up at all. Number two, on that middle run for what we would call a wrap order, you need to move up modestly. Number three, you need to go up significantly. Okay, so different ROIs, different scenarios. And then number five, you need to define your risk. Now, the golden rule of this trade, if you don't remember anything else about setting up this trade, it's this. If rung one wins, the total trade should never lose. Okay? So again, if rung one wins, the total trade should never lose, which means you have to apply the right capital to make that work. Okay, everyone with me, give me a yes in the chat. If you're setting up the three trades, your first most defensive trade, if that one wins, you should not lose money across the rest of the trades. If so, you've broken the ladder trade. The rung is broken, the ladder is broken, it's falling off the house, you've broken an arm, okay? It's not working if trade one wins, but the rest of the trade loses. So we have to then understand how to allocate proper capital to make that a reality. It is a little bit complicated, but if you get comfortable with the math, it becomes pretty straightforward. Here's basically the rule of thumb. If you have about a 40% ROI, then you're probably going to need to apply like 85% of your capital on rung one, because 40% ROI is not enough to give you a big ROI where 50% capital allocation is going to guarantee the rule we just talked about, right? Because we have to guarantee the rule that we just said, where if rung one wins, the entire trade wins. So if rung one is only targeting 40%, you need probably 85% capital. If it's going for a 50% ROI, you need about 75%. If it's going for 60%, you probably need more like 65%. So these are just the general rules of thumb to get you in the right capital allocation in order to make sure that we do have that. If rung one wins, we do not lose the total trade guideline. This is how you have to apply the capital. Here's our pre-trade checklist. Rung one, make sure both legs are in the money. Make sure all three trades have the same expiration. Make sure that your risk is applied properly. You have the same risk you're comfortable with on one trade divided across all three, and make sure you do the math. If rung one wins, am I break even or better on the trade? Okay.
So let me just jump in and say, for those that are like scrambling, trying to take notes fast enough, if you're part of or join the $1 opening playbook membership, which is literally $1 for lifetime membership, and the link is pinned to the top of the chat right now, this slide deck will be available. We actually have a calculator that I built that checks your trade and against all of these rules also. So it's all in there. You don't have to scramble and take notes right now if you're willing to spend the buck.
If you were willing to spend the buck. Famous last words. If you were willing. Okay, so that's our checklist. Live example here on a trade that I like is XLU. I've been liking XLU for a while. It beat me up once or twice on the way down, but I've got some winners and I still like it. This is the chart. It's exactly what I described. It's in an uptrend. It's also building a base. It has directional potential, but also I think is in a good defensive position. So then step 2 would be, all right, how do we trade it? Well, let's say that we have, I put 3,000. Let's say that we have $1,000 that we want a total risk for the trade. We have to figure out how do we divide that up, right? So these numbers were based on an hour ago, so they might not be accurate. We'll look it back up. But basically, this is how you would do it. Okay, what is my in the money spread? My rung 1 trade, okay, it's 58% ROI. Number 2, okay, it's 109% ROI. Number 3, okay, it's 225% ROI. And then based on that, we can determine our ROI. So again, I'll do this in real time, but you would say, okay, rung 1 pays this. That means this amount of money. Rung 2 pays this. That means this amount of money. And that allows you to do the math on the trade. So let's actually pull up those numbers and we can start mathing here together. Maybe we should just call the opening playbook group like the mathletes, since we cover so much math in here. All right, let's pull XLU up. I'll show it to you on. I'm trying to figure out if it's easier to show it to you on the broker or pull up this presentation and put the notes in there. Let's start with the broker and then we can go from there.
I can take the notes as you go through the broker if you want.
That would be lovely. Actually, Dave, let me do this. I'm going to one up you because you volunteered, and now I'm taking full advantage of you. I am going to Slack you this document, and then if you want to literally take the notes right in there, you could even share it if you want at the same time.
Okay.
Because slides like 24 through 26 are just kind of messy with some blanks in there because I didn't know what our numbers would be. But if you want to literally fill out those numbers,
sure,
that would be pretty cool. And then we can do it in real time. All right. Neato, gang. Okay, so this is XLU, a chart that I quite like right now. And so, like I said, 3 to 5 weeks is kind of the sweet spot here for how I like to trade it. Right now, I would lean toward a little bit longer just because that chart that I showed you here on XLU, this is a weekly chart that we're looking at. So, I would like to give it a couple weeks potentially to get back up over 47. I think it'll make all-time highs in the relatively near future, but this is a weekly chart. The downside that we do have for us right now is that VIX is still pretty high. So we're not going to get the best pricing on our options, but we're going to get a lot better pricing than we literally would have yesterday. So at least we have, a little bit of an advantage compared to yesterday or the day before. So we'll see what the pricing is. It won't be as good as, the VIX at 20 or 18, but it should be okay. All right, we're going to do all $1 spreads here. Let's start with our in the money trade, which we can try to go a full dollar in the money, but I'm guessing we're not going to get good enough pricing there. A full in the dollar, a full in the money, a full dollar in the money. Wow, we are struggling today, ladies and gentlemen. A full dollar would be the 44.45 debit spread. That would be like, over 2% in the money. You can see we're not going to get a good enough price there, which is no surprise, especially on something stable like XOU, full 2% in the money. So we'll probably have to do the 44.50, 45.50 on that one. And if we can get filled for like 68 cents or so, then we're good. We're in that 45 to 50% ROI. If you wanted to be a little more aggressive, you could do the 45.46, but then you're 7 cents in the money. So you're definitely not half an ATR in the money. Let's go with the 44.50, 45.50, and see if we can get 68 cents. I'll just do this one contract at a time to see if we can get filled, because that way we can kind of confirm the numbers as we go along here. And then while I'm trying to see if we get filled for that, we can then set up our wrap order, which is going to be the 46.47. Should be 46.47 cents. Ironically, 46.47. We should be able to pay 46 or 47 cents. That'll be 110, 115% ROI or something in that range. Again, I'll just try one contract to see if we can get filled here and verify some prices. And then we can just go up to 47.50, 48.50. Is that right? 48. Oh, that's a little high for 3 weeks. Okay. Let's actually do 46.50, 47.50. Yeah, that's what we'll do. 46.50, 47.50 should be under 40 cents there. And I'll try one contract there. I want just 1 penny below each one to see if I can get filled. I'll let them hang there for a while. Not going to be a ton of open interest here on XLU. So as always, patient, only pay the limit that you want to pay, and be very patient. In the ladder trade, if one gets filled and the others don't, then maybe you can be a little more aggressive chasing it to try to get your full ladder built, but don't go crazy just because you feel like you only have one leg and you intended to have 3 legs. Don't go crazy chasing the trade just to feel like you had got all of your on. I have not been filled on any of these, but I'm going to give it 1 minute here because we're just 1 penny away from the mid price right now, and the market's bouncing.
Do you know what the
little
ATR is you're basing all this on?
Yes, I pulled it earlier. I completely forget what it is, but I did pull it earlier at 9:30 when I did this trade. It's less than $1. 70 cents is the standard ATR. 32 cents is the net ATR. So we are if you want to get that half ATR plus roll, we're there. Oh, look, there we go. Okay, filled. Oh, never mind. That's an option X trade filled. Okay, FCX got filled. Good pop on FCX today. Like I said, some of those metals that were out of liquidity really popping today. FCX up over 4%. Again, today, silver lagging behind, by the way, which is interesting. While gold makes a really nice move. Man, that move off that level we called on GLD.
Mm-hmm.
Wow, was that a good level? I should have really been more aggressive there. I ended up doing just a 2-way trade. I almost got filled on a whopper. Man, that's frustrating. Anyway,
Did you
no fills
set a
yet.
budget
Okay.
for this or no? A total budget for the trade?
Yeah, I'm going to do it based on $1,000. I just literally did one contract so far just to see if I can get filled at those prices.
Yeah.
So, Dave, what did our original ROI for base one end up being?
47. Well, if you get it for 68 cents, it's 47.
47. Okay, so at 47%, we'll probably need to allocate about 70% of the budget there to make those numbers work. So if you guys were doing, again, not everyone's doing $1,000 here, so keep that in mind. But if you were doing $1,000 on that first one, you'd have about $700 in, or about 14 contracts into your first trade.
Yeah, I have it as, I can show you if you want the math on it, since you're not sure.
Yeah, please do. Anyway. I'm going to keep.
I typed it into your spreadsheet, but I mean your presentation, but I also typed it into the calculator.
The date here is the 24th.
Yeah.
Okay, so
let me zoom into this a little bit.
While you're doing that, I will.
So if we have $1,000 at a 70-30 split, this is what the math would be. Right now we had 44.50, 45.50 as the first spread at 68 cents. It's 47% ROI would be 11 contracts at $780. Did I lose you?
No, I'm sorry. I'm just reading your sheet in real time. Total budget 252. Okay, perfect. That looks right. Okay, now we just got to see if we can get filled.
Well, it fails the tests for the second and third rungs on the max out of the money ATRs, but that might be because I used the 0.7 instead of the 0.3.
Yeah, it should be within. Well, although I guess it's 46.10, so even on the regular wrap order, we only have 50-cent spreads to work with, so
Yeah.
we're gonna be a little bit under, I'm sure, on the. Okay, it filled at the first one filled at 38. To Dave's point, it's such a low priced asset that the ATRs are going to be a little outside. That first one is going to be, yeah, about 90 cents. Now, granted, we did go the full 24 days out on that ATR, so we're not pushing the envelope too far here. But with that, only those 50-cent spreads available, we're pushing it a little bit. Everyone see what I mean there? Because we only have 50-cent spreads to work with, we are not able to really tighten those strikes right around the current price. Marla said first attempt at an option. Well, Marla, I'm sorry that I'm doing a complicated trade here on your very first one. I apologize. Okay, let's.
You're going to want to just watch this one, Marla.
Okay, so on 38 cents, Dave, do you have what the percentage on that one is at 38 cents? Sorry, I'm on the first one. I mean,
you got this for 38 instead of 68.
No, I'm lying. That's the third rung. Sorry.
Yeah, third rung, 38.
Yeah, no, I know. You're right.
Okay.
I'm just losing it over here. Okay, guys.
So ROI was 163.
We're gonna post the trades, but don't worry. I'm trying to make sure the numbers actually work and we have real prices, because I don't want to post imaginary trades and then update them. So just they're coming. All right. XLU's popping just a little bit right now. All right, I'm gonna leave the other two as pending, and see if we can get filled. Okay, and then if only rung one hits on that capital allocation, we'll have okay. Oh, all right. Second rung hit. Interesting that. All right, Dave, can I show the screen now here? All right, so here are the three trades. Zoom in here a little bit. Okay, so the first one, and again, these are all for April 24th. I'll post them in the chat as well, but just so you can see it. 44.50, 45.50. That first debit is 68 cents. It's a 47% ROI if that hits. 2 is 46.47, which costs 46 cents. That means it's 117% if it hits. And then, add that. And then rung 3 is the 46.50, 47.50. That's 163% if it hits. So more allocation, lower ROI, less higher ROI, less higher ROI. And if only the first rung wins with that higher allocation, then we're still going to be at $1,000 plus with like 950 or something spread across, meaning we hit our roll. We hit that first roll here of, as long as trade one wins, we'll have a net winning position across the total three. Okay, so, oh, there you go. I was about to say, I'll type them in the chat, but there you go. This is based on $1,000 total risk, okay, where your first trade is going to be 11 contracts, your second trade 3, and your last trade 3. And if you win the first trade, you're net profitable. If you win the first two, really nice. If you win all three, amazing. And that's really how the ladder is designed to work. That I'm protected with a defensive trade, but I'm still trading it partially directional with those. Oh, Dave, I think. Wait. All right. Yeah. No. Andrew's lying to me. Andrew, yes. Number two. Yes. Rung 2 is a wrap. XLU is trading at 46.10 right now. Now, to be clear, a better wrap would be the 45.50, 46.50 because it'd be a really clean wrap around the middle. But because we're already using the 45.50 in rung 1, we can't sell it back in rung 2. So that's why we bumped up to that 46.47. Okay. Any other questions? I know we went with a pretty complicated trade today. So for those of you who are new to trading spreads, it's like, wow, we went from trading spreads to 3 spreads at the same time with multiple allocations and everything like that. This is one, definitely take a little time to digest if you're new, but it's just the main point in showing you this isn't just to get you into an XLU trade. I mean, I like XLU. I think it's a good opportunity right now, and I've traded it. But the real idea here is to kind of show you trade structures and flexibility and some of the risk allocation ideas.
And then if we go through, sorry,
if we go through the numbers here real quick, Dave, I'll just plug in your number. Do you have your numbers still in the calculator real quick?
Yeah. What number are you looking for there?
If rung 1 wins, what the
ROI?
Like 40. Actual dollar amount on the 750, what it would be? Do you have that number?
Actually, no, but I can do it in a second.
Okay. I'm just going to plug in so you guys can kind of see the defensive trade versus the ladder full.
351.56.
351.56. Okay. And then what would rung 2 be?
161.46.
146. And then rung 3.
182. I'm sorry, 185.82.
All right. Do you happen to be able to sum those for me? I'm just
698.
making Dave do all the work here.
698.84.
698.84. Okay. So I'll get rid of this because that makes it a little more complicated. But so basically what we did is we took a trade from our original one that had, the 45-ish% return, which on $1,000 would return $400. And we tried to flip that into going semi-directional, where we turned a 40% return into a 70% return. But if we're right about the first one, we're still not going to lose. And that's really the idea of the trade. You flip the 40% potential ROI into a 70% potential ROI without actually adding any risk to your worst case scenario. Worst case risk is still exactly the same, but upside potential goes higher. And that's exactly the idea. The 46.50, 47.50 got filled at 38 cents. I still didn't get filled in the first one. For some reason, the first trade mid price is fluctuating more than the others. But I think at 68 cents, 69 cents, we should fill here. XLU is actually down to about $46, so it should fill. I think just kind of bouncing around right now. So I'll just be patient and give that one a minute or an hour or 2 hours to see if we can fill.
So that calculator that's in the members area, once you fill it all out, if it passes all the tests, it actually gives you exactly what I posted in the chat as far as the trade instructions. Gives you those trade instructions. So it tells you exactly what to buy on each rung.
Yep. So and V Money said, yeah, the trick is getting filled on all three for sure. That that managing your pricing, your allocation, and then actually getting the fills. Absolutely. XLU is a little bit lower liquidity, so it's maybe a little bit more work to get filled on XLU than Tesla or Nvidia, but you can still be patient. The good news is if you only got filled on one trade and not the others, you're not you're not putting a risk inappropriate trade on. You want to get filled on all three, obviously, but you're not putting a trade on where like, oh shoot, I had risked $3,000 and I was supposed to have this hedge on the other side that didn't get filled. It's not that kind of situation. It's a kind of situation where it's ideal to get filled on all three. But if you only got filled on part, you had to be patient, or even if you never got filled on the others, you're not like out of balance in some, inappropriate risk setup. So that's kind of the benefit of the ladder trade versus, if we do a pair trade, you don't get filled on the other side. Now it's a little bit dangerous because you have one side that's supposed to be kind of a hedge and it's not filled, it's running away from you. That's a very different story. So just keep that in mind as you kind of think about the setup of these kind of trades. And like Dave said, if you're in the opening playbook members area, you can mess around with this without even trading them. Just do one at a time. Set it up theoretically, look at the contracts, look at the numbers, make sure they all make sense to you, so on and so forth, and then feel pretty comfortable about the actual setup itself.
A couple questions about managing after they're in it.
The intention is to let it go through expiration, but like I said, if you want to add a little bit of nuance, for example, XLU is up 2% tomorrow, and you want to take profits off legs 2 and 3, and then just keep your safer defensive trade on, that's now even more safe because it has a bigger cushion. You can do things like that, but the intention is essentially use the entire time decay because that's what makes the math work on the initial leg and all of that. If for example, you close the initial leg for 65 cents tomorrow, well, now the math doesn't work where it guarantees you the rest of the trade is risk-free. So that's no. So the intention is you have one amount of risk for an individual trade. Like, hey, I'm willing to risk $500 per trade, $1,000 per trade, $10,000 per trade, whatever your risk threshold is, and then you separate it into the 3 legs so that you're treating it as one position as a whole. Well, Marla, if you bought $1,000 of XLU at 45 and it went up to 47.50, how much money would you make? So just do the math on that. The entire intention of using options in some way or another is leverage. Now, I don't like direct leverage, but that's the intention in one way or another is some version of leverage. So let's just do the math, Marla. Let's say you bought 1,000 shares at 45.96 and it goes up to 47.50. Well, now you made $1.54 on 45.96 base cost. You made a 3% gain. You times that by $1,000. You made $33. And that's if it does go up. I'm saying same exact setup. If it goes up, instead of making $33, you make $700. So you make 20 times the ROI. And the crazy thing is, if XLU goes sideways, your stock gains no value, but we still have a winner in this situation. So the benefit in my mind is from a risk to reward and a scenario, not just risk to reward, but also a scenario basis, you get an advantage by structuring trades in this way. Keith, yes, you can use the income machine to do it. Obviously, the income machine is going to give you leg 1, right? It's not going to build a ladder, but it's going to give you essentially leg 1. I think XLU is undervalued right now. It's a great trend, and I think utilities are going to be one of the big winners for years to come with the AI race and otherwise. I think with energy going parabolic, XLU, in my opinion, is a bit undervalued in relative terms. And so I really like XLU for the long term, but even just from a structure standpoint, breaking back above 45, I think is a good place for it. And I think 3 weeks is a decent time horizon to give it the potential to do that. So I'm an XLU fan going way back. I'm maybe a little biased, but I think it's a good opportunity, just generally speaking, and then obviously specifically on the trade itself. Okay. Well, folks, speaking of the income machine, is that what we're talking about today, Dave? Am I supposed to be talking about the income machine? Okay. I thought so. Speaking of the income machine and being a good opportunity for the first leg, if you guys aren't familiar, you can use the income machine for free. That's the deal with income machine. It's very unique in that way. You can try it for free for 30 days. and let it go to work for you. Make sure you like it. It works the way I expect. We have a whole presentation that walks you through all of that if you want to check it out. So we'll play that presentation, and it's much the same idea. Bodie said from way back, who's their quarterback? Cordell Stewart was the XLU quarterback, Bodine. He was a runner, and I expect XLU to be a runner as well. So anyway, check out the Income Machine if you haven't already. I think, it's always a great thing to use, but specifically as we, I think, settle down at least to some extent in this market, it's an outsized, beneficial structure. And like I said, you can try it for free. So it's kind of a no-brainer from that standpoint.
So today you guys are going to see the first income tool of its kind. It's designed to give you different choices, different options, all done for you. And that way you can find the one that you find most appealing. And today, by the end of the class, you can unlock the newest income opportunity today. No payment necessary, nothing like that. Like Nate said, no strings attached. Now, the trades expressed today are based on signals that the Income Machine generated with the benefit of hindsight. And while today's guest, Nate, has been using this tool with great success in his own trades, including a 93.3% win rate as of this last week, with a 4.92 profit factor on live signals. Well, you guys know that that's great, but there's going to be winners, there's going to be losers, so let's be smart here. Now, every example today is based on $2,500 unless otherwise stated. However, this is important. You don't need $2,500 to get started. A lot of these picks are as cheap as $100, $200. Some are even like $50. Now, the stories that we're going to share today were from real people who submitted their story for us to showcase. We did not meet with anyone one-on-one. We did not advise anyone's financial situation. We don't do that. We're publishers, not financial advisors. Now, each person makes their own decision when it comes to trading. So trade at your own risk, and you can see the terms on our homepage for more information.
And by the way, thank you for all those incredible stories you guys sent in.
We ended up with over 1,400. We asked for 500. We got over 1,400. Now, guys, just to say this one more time, there's no black box miracle system. There's going to be winners. There's going to be losers. So be smart. Make sure that you are trading risk appropriately, and then look to grow an account over time.
Sorry, Graham, my keyboard is whacking.
All good. Hi, I'm Graham Lindman, and I'm your host for the big reveal of what we're calling the Income Machine. And today, I want to invite you to get your hands on the Income Machine for free, and I really mean free. It's all part of a brand new initiative designed to help everyday traders target extra income from the stock market. Now, I'm talking about income opportunities that could be worth $250, $500, or $1,000 each week, all based on your own risk appetite and your own investing goals. You see, over the last few weeks, I've been privately meeting with trading superstar Nate Tucci, who's quickly becoming one of the most popular traders under the age of 40. Now, after using his aggressive income approach to publicly grow an account from $10,000 to $50,000 in about 4 months, and then quietly generating over $100,000 in his slow and steady income portfolio last year alone, well, now Nate has set out on a mission unlike anything we've ever done before. It's a mission to solve one problem that no one else in the trading world has. You see, most income methods out there box you into a single approach. They're either built for the ultra your desired approach, or even the ability to shift your risk appetite based on market conditions or other factors. But what if there was an income system
Sorry, we're buffering here, folks. Hang tight a second. We're working on it. Give me 1 minute.
what you are most comfortable with? Well, as you'll see today, that's exactly what the Income Machine was programmed to do. It's the first income tool of its kind, designed to help you dial up or dial down how aggressive you want to be with just a few clicks. Every day it uses a proprietary formula that scans the entire market, identifies the strongest setups, and then breaks it down into 3 specific trade ideas so that you can choose the route you want to go. The conservative approach, that's for folks wanting to shoot for consistent wins and limited risk, targeting right around 250 per trade. Or the balanced approach for folks wanting to target a little more upside, shooting for around $500 per trade. And then there's the aggressive approach. That's for those chasing $1,000 plus payouts with smart, calculated trade setups. Now, regardless of which approach fits you best, you'll get exactly what you need to act with confidence. You'll get the exact stock and options to trade. You'll get the exact hold time. You'll see the break-even price, the expected income potential, and even the calculated odds of success, all done for you. No guesswork, no noise, just a direct income signal where you have the power to pick the opportunity that you like the best. So whether you're in retirement, scaling up a side hustle, or just getting serious about finding new ways to help build monthly income, well, the income machine lets you pick your path. All you have to do is press go. And today we're going to give you a chance to try it out for free. You won't have to pay a dime, not even a credit card required. That way, by the time this class is over, you'll be able to start using it right away to access the top income opportunities already selected for today, targeting the next $250, $500, or even $1,000 payout right from your standard brokerage account. So Nate, it's great to have you on today. Show us everything.
All right. Well, hey, everyone. It is amazing to be here today, and I can't wait to give you the keys to this all new, fully automated income machine over the next couple minutes. A tool that can allow us to target, $250, $500, $1,000, sometimes even more, using an optimized income opportunity every day with just a couple clicks of the mouse on the tool. It's all thanks to an underlying market phenomenon that I've been using in my top income strategies. Phenomenon that's helped me with, real-time win rates like 77.7% on overnight income, 80.5% on 2A income options. Those are, a great income strategy for people, and even 100% on the weekend income strategy. So obviously, income, this is kind of what I do. These are all on live published trades. But now with the income machine, I've programmed something even more powerful all in one place to help us automatically source some of the best income opportunities each and every week, where you have the power to pick the approach that fits you best. Now, keep in mind, I'm not a financial advisor. I'm not going to go into, what trades you should pick or what you shouldn't go with. That's obviously 100% up to you and what you decide. But I did the best I could to make this tool as easy as possible for anyone and everyone to use, regardless of your preferred trading style or income goals. That includes all sorts of people like Tim C. from New Jersey who wrote in. He said that he is working full time and enjoys hobbies like golf in his free time. So, of course, I like Tim because, that's me. According to Tim, he would like to supplement his income and scale his investment account before he retires. But Tim told us he doesn't want to just blindly swing for the fences. He wants something that's consistent and reliable with a very strong track record. So for anyone out there looking for the most conservative income opportunities, well, we've got you covered. Or how about this one from Tyler G? A lot of folks like Tyler from North Carolina. Tyler wrote in saying that he's a dad who balances a day job with running his own business. And while he might not feel ahead financially, he's very motivated. When he's not working, he's spending quality time with the kids and now looking to grow an account in a way that doesn't steal that time from them. With that in mind, folks like Tyler might not want to stick with a slow and steady approach. They might want something that's more middle ground. So if that's you and you want to shoot for a slightly larger income potential in your trades while still maintaining a really high accuracy rate, well, the income machine can do that too. That's our balanced approach there. But it doesn't stop there, okay? We've heard from people, hundreds of people, maybe even 1,000 people at this point, who are more like Karen from Tucson, okay? So Karen says she wants to target bigger returns and lean into a little more volatility if that means a shot at more money on a given trade. Why? Because she's got a mission. She wants to replace what didn't work. She wants to get into those higher risk-reward opportunities and hopefully fund the travel dreams she's been putting off. So if you're someone who wants to go for some of the biggest income opportunities available, like targeting $1,000 or more on a given trade, that's why there's also an aggressive income approach baked in, which dials up opportunities that give you the most bang for your buck on a given trade. So 3 different income approaches for 3 different types of investors. And regardless of who you are, which approach might fit you best, the income machine puts you in control. Then it gives you the exact trade criteria to follow along if you like what you see. So over the next few minutes, I'm going to walk you through some of the stories that my students wrote in and show you how powerful this new tool can be for people of all walks of life. And I really mean that. While I do that, I want to start, having you imagine what this tool could do for you in your own life, because you're going to be able to get a chance to use it in just a couple of minutes, because you'll see firsthand how the income machine was specifically designed to help navigate the market for anyone and everyone, regardless of your financial status. So if you fall into the everyone category, then yes, I am talking to you. And finally, as Graham mentioned, I'll be dropping a link in the chat. For those of you already asking, just keep an eye on the chat. That's where you're going to get a link where you can join the income machine today at zero cost to give it a test run. Now, Wall Street wants you to think that making money from the stock market has to be complicated and time consuming, and that you will have to wait years to get a payout. But the truth is, it only takes a few minutes and a couple clicks of the mouse to start targeting extra cash from the stock market. One of my favorite things is showing folks how to target income from the stock market week after week. It's kind of what I live for. It doesn't matter if you've been trading for 10 plus years like I have, or if you're literally just getting started, you've never put an option trade on. And now with the income machine, those types of opportunities can be more accessible than ever before. To keep things simple, let's say someone has $2,500 to invest and they want to start using the income machine. Well, for starters, we saw tons of stories from people like Linda from Texas. Linda wrote in that she's a full-time side hustler with a dream to retire her husband earlier than expected so her kids can spend more time with her dad. She doesn't want to gamble. She doesn't want to overcomplicate things. She wants something that's stable, something that's steady, something that's going to work with a high hit rate. So let's imagine it's February 10th and someone like Linda pulled up the income machine and wanted to set up with the least amount of risk. Okay, that's what they were looking for. Well, at the top of the list, we would have seen Visa. Okay, that's ticker V, as an ideal income generating stock for that particular week. You can see it right there. Visa automatically pulled up on the income machine. Anyone who wanted the safest play could have clicked on the conservative approach. And with that one click, they would have seen all the trade details. Literally one click, they would have seen all the trade details for Visa on the conservative approach. The ticker to type in, the exact options to trade, the entry price, and even the income potential at expiration that they would get based on the trade. From there, folks could have simply placed the trade in a standard brokerage account or approved retirement account, and when things worked out, automatically cash out a few weeks later. In this case, was about $302 extra sitting in their account. No guesswork, no babysitting the trade, and with about 60 seconds of quote-unquote work, folks like Linda could be $302 closer to making that dream happen. Next up, we have a ton of students like Kendra C. Kendra mentioned that she's a busy working mom in her mid-30s with a young family. She said she juggles work, school runs, late night dinner, all that stuff that moms do. I can very much appreciate that because my wife is doing that for 7 kids. So time is tight. Lately, she's been thinking about building a second income stream, something that could help cover more travel and new experiences with her husband and the kids, and ultimately less stress in her day-to-day life. Now, Kendra doesn't want wild swings or high risk, but she's also not afraid for going for a little more upside than the conservative approach when the odds are in her favor. So if someone like Kendra logged in the income machine and saw Visa listed as the top income opportunity for the day, they would probably be clicking on that balanced income approach. That's that middle ground one. In seconds, they would have seen the full trade layout, ticker, options, expiration, expected return, clear risk parameters, literally all done for you automatically. All specifically selected to target a slightly larger payout on this Visa setup. And anyone following along could have opened up their brokerage, go ahead and thrown that Visa income position on using that pre-built trade, and then gone back to work knowing that they just gave themselves a chance to pocket a few $100 over the next couple of days. And in this example, by the following Friday, an extra $625 would have hit the account. Now, it's a little juicier than the previous approach using the conservative. For folks like Kendra, a few more trades like that, it could be enough to surprise the family with a weekend getaway. Now, of course, steady gains or even moderate gains, right? Some traders want to swing bigger. They're willing to stomach a little more volatility if it means chasing a $1,000 plus payout on a single move. Just ask folks like Todd M. He's a soon-to-be retiree from Central Illinois, and Todd told us that at 64 years old, he's on the verge of retirement, but he's not planning on slowing down. He wants to bail out his funds, secure his grandkids' future, and pay off debt, all while trading full-time. And for Todd, he said he prefers to go for those larger returns when placing a trade. So if someone like Todd pulled up the income machine on February 10th, same date, same trade, but this time they could have went with the aggressive income approach. And similar to folks like, Kendra and Linda, the examples we just gave, anyone who went with the aggressive income approach on Visa would have had all the trade details mapped out for them automatically, except these specific options would have been tailored for that bigger income opportunity, allowing folks to target a little bit more bang for the buck on that trade. $1,231, pretty good trade on Visa. So anyone who set the trade signal, when we had Visa on the aggressive approach, could have ended up with $1,231 over the next 11 days or so, giving folks like Todd more time with the grandkids, fishing, camping, and showing them the better side of life without actually having to manage the trade.
Nate, this is awesome, but let me just pause you for a moment here. You just showed us how folks could have pocketed $302, $625, or even $1,231 with a few clicks of the button, all generated, fully automated from the income machine. And honestly, regardless of which outcome folks would have gone with, that could have been a little extra cushion to have in the wallet. Think about it. Since the pandemic, inflation has gotten out of control. Housing costs have shot through the roof like crazy. We've seen the grocery bill somehow seems to have magically doubled over the last few years, and there's no real debate here. A lot of people are feeling financially squeezed right now and are in desperate need of some extra cash, even just a little extra to get by. Now, of course, you're not promising overnight riches here. That's not what today's class is about. But that's an extra $300, $600, or $1,231 that could have maybe gone towards paying down the credit card, or maybe, saving up for the next vacation, or even just a little extra cash to beef up the emergency fund. Now that's great, but if you ask me, here's the best part of it all. Those examples were based on 3 different approaches, based on 3 different types of investors. And I know we've got all sorts of investors here in the room today. But as we saw with the income machine, folks would not have been boxed into only one approach that they may not have liked. Actually, just the opposite. There was a path for each type to aim for anywhere between $250 to about $1,000 by the end of the week, all based on the approach that they wanted to go with, the risk to reward that they liked the best. So Nate, can you tell us a little bit more about how the income machine works and what makes it all possible?
Yeah, absolutely. And before I do, I think this will be a good time to remind you guys, no strategy wins all the time. Obviously, just showed a great example, but there's no instant income magic pill, right? Hopefully everyone is already aware of that part. Please understand there's going to be winning trades and losing ones too. However, while we can never promise any future returns and never will, the income machine has been able to lock in some really nice payouts week after week. And so far, we have a 93.3% success rate so far on all the trade signals that, I've shared kind of blended together using those different approaches, which means so far we're winning more than 9 out of every 10 real money trades from the income machine. But to be extra clear, what I'm showing you is not some, money printer you can run in your basement. Instead, it's a way, and I think probably the best way I've ever come up with, to give folks a leg up in the stock market and target some of the most repeatable income opportunities out there without needing to be glued to your screen 24/7 to make it happen. Even better, with the way the income machine selects the trades, we don't need to rely on stocks to be in a bull market to hit our full profit potential. For example, let's take a walk back a few months ago to March. Now, if you're like most people in March, you probably watched your 401k drop like a rock. Over a 2-month stretch, the S&P slid 20% into bear market territory. Hopefully, we all remember that. It wasn't that long ago. The NASDAQ was down 23%. Even the Dow Jones, which is supposed to be more stable, was getting absolutely smashed, falling off a cliff. And again, let's say you had $2,500 to invest. In March, folks invested in the stock market would have obviously lost money. A couple $100 at least if you have that invested in the stock market while it's collapsing. But folks using the income machine could have seen a very different story. For example, on March 10th, it fired off a new income opportunity on Amazon. Now, folks who are like Ralph, who are maybe retired and looking for a strategy that aims for stability and really puts a premium on risk management, you could have pulled up the income machine on March 10th and had the option to select the conservative play. Then you could have copied and pasted over the options, that come automatically for you, and that's it. And when the trade panned out, you would have ended up $321 ahead, hands-free, without even managing the trade, and done it even as stocks actually kept sliding that week. Of course, just to be very clear about the income machine here, you could go for more than that. 321 is just the conservative approach. Maybe you're like Stuart M., who wrote in. Obviously, so cool to see so many of these stories. He's still looking for a really high win rate, and he wanted to make a little more bang for his buck. Well, he could have went with the balanced income, same process but different outcomes. With the balanced income options, folks could have ended up at about $563 on that very same setup. Now, for anyone who's looking for a little extra sizzle on the income setup, folks like Mary H, who said she wants big results, going for as aggressive as possible, well, there would have been an income path available there as well, with all the trade details baked in for the aggressive trade. And to no surprise, once again, the aggressive income approach also would have paid nicely that week, $1,468 on Amazon, even though the chart doesn't look very pretty. And all in all, over the course of those Amazon examples, it would have been great regardless of which approach you took. $321 on the conservative, $563 on the balance, $1,468 if you went with the aggressive approach. We're not done yet. Next week rolls around. Keep it going. March 21st. This time it was General Electric kind of topping out the scales here as a great opportunity. Now, let's say someone is like Charles C. from Shippensburg, not too far from me, still working full-time but hoping to retire in the next handful of years. And he wants a way to generate a little more income between now and then to beef up the funds, and he wants a more moderate risk level. Well, on March 21st, when the income machine picked up on GE as an opportunity, folks like Charles wouldn't have been left to take on a slow and steady approach, but they also wouldn't have forced, to go for a more aggressive approach. Instead, they could have taken the opportunity to go down this balanced income path. And the options are literally automatically generated right there for you on that approach, pre-selected to help target their goals. So if you want to go either way, they're going to be tailored for you. And sure enough, when it all worked out, collected a smooth $578 as the markets bounced back that last week of March. For anyone like Charles C., who enjoys getting outside, that could have covered the next 5 rounds of golf without needing to scale back on the retirement savings. And if you were wondering, yes, the other approaches would have worked. The conservative income approach would have had a great week, $366, as did the aggressive income approach there on GE, $1,150. Then again, the following week, okay, this is getting into the last week of March. Again, not exactly a great month to be taking examples from, but it would have been the same exact story. Now, this week in particular was a horrendous week for stocks. With Liberation Day, tariffs sending stocks in a downward spiral, it was the 5th worst drop in 100 years. But that actually didn't really matter for us. All right, on March 31st, there was another income play populated on the income machine. It was Tesla. Most people trading Tesla on March 31st, I don't think fared too well. But this time, let's imagine you're like Catherine, okay? She's another one of the great people who wrote in. We saw many messages, people who trade full-time and are looking for income methods with a lot more juice, even if that means you're only winning 70 to 80% of the time instead of maybe a 90% win rate. Anyone who wanted to go for that biggest payout, they could have clicked on the aggressive income approach on Tesla. And the options with the highest upside would have automatically populated from the tool itself. You just copy and paste the trade, including listing the entry price, the income potential, so that anyone could easily take that trade. And if you did just that, well, guess what? Once again, you could have still had the chance to cash in really nicely, $1,406 on Tesla, even right through Liberation Day as the market took a massive plunge. For a lot of folks, that's a mortgage payment without even looking at the charts or clicking another button, not clicking a single extra button once the trade was entered. Okay, and obviously the same could have been said, about the conservative and the balanced income approach for Tesla that week as well. The conservative approach was about $373 on that Tesla trade. The balanced one would have been a little bigger, $789.
Nate, between that Amazon, GE, and Tesla, those opportunities which came back to back to back from the income machine, that could have been 3 weeks in a row of banking some extra cash during obviously a horrible time for most investors. And depending on the route folks went with, whichever one they chose was best for them, those payouts could have really stacked up for the month. Let's take a look at them here. An extra $1,062 for the month with the conservative income approach, $1,932 if you stuck with the balanced income path the whole time through, and a whopping $4,024 for the month on the aggressive income path, all of which could have been pocketed during that terrible stretch for the stock market and regular investors. And keep in mind, guys, it's not like you have to stick with aggressive the whole time. If you want to go aggressive, balanced, conservative, you can mix it up. And Nate, I have to say, while having a shot to pocket an extra $4,000 in a single month might sound far-fetched to some people out there, you're no stranger to showing folks how to see results like that from some of your income methods in the past. Just hear from some of the top students. Listen to this one here from Carl P. He says Nate and his team are doing a tremendous job, up over $4,000 in about 5 weeks there. Ken says, I'm up $5,000 for the month. I don't trade as many contracts yet, but I'm getting closer to my goal. Thank you, Nate. And then there's Craig, who said he started with 3K, and now his balance is up to $7,480 for the month. Jack A, he went 3 for 3, up $9,000. And then Roger here said up $15,770 after the first 8 trades. That's amazing. So Nate, I understand that the income machine gives us 3 potential income approaches each day with different risk to reward payoffs. The least risky approach shooting for about $250 per trade, the middle ground approach about $500, and then the most aggressive one going for that big $1,000 plus payout. But can you tell us, how does it actually work? Can you break that down for us a bit further?
Yeah, I'd love to. And this is the part that gets me actually really excited. So it's all thanks to a powerful phenomenon hidden inside the options market, one that's been studied extensively by researchers from Harvard, Yale, even major institutions like Charles Schwab. Wall Street loves exploring this phenomenon, while the average Joe tends to totally miss out. It's how they seem to almost always bank record trading profits, even during some of the most turbulent times for the average investor. I mean, you can see, you can go through these headlines all day until you're blue in the face of them making record profits. In fact, it's so good that it even helped the CEO of one fund, Ken Griffin, catapult to the 40th richest person in the world. Guys, not by doing anything other than really taking the other side of most people's trades. Now, when I say options, most people think of buying options in hopes that the stock is going to rally higher. The problem with buying options, the way that most people do, is that they don't tend to pay off. They simply tend to lose, often even when you do get the direction correct. As a matter of fact, one of the studies that I always like to cite, because people don't even know this, the Chicago Mercantile Exchange reported that 76% of options expire worthless. And in another report, a contributing writer at a Financial Post study who studied options extensively wrote this, which is a lot crazier. He found that up to 90% of all option buyers actually lose money on their trades at expiration, even if they're right about the underlying move. Anyone in the chat? Yeah, yes on that. It's happened to me more times than I care to count way back in the day. But with the income machine, we're not simply going out and buying options like most people do, hoping that they eventually become profitable, right? Instead, I'm leveraging the ones that are already profitable, where we don't need a directional move in our favor to hit our full profit potential. In fact, with the options we're leveraging, we can hit, that 250 on average, $500, $1,000 goal, even when the stock we're trading goes slightly against us. For example, like the next position I shared with folks from the income machine in May, which could have paid about $586 with a balanced approach while the stock was totally flat. And then we had the next one on the income machine. Again, these are all trades I shared publicly with people and gave away for free. This one was on Palantir, PLTR, okay? And this was the aggressive approach, which paid $878, even while Palantir actually went down a little bit from the time that we entered the trade.
So Nate, are you maybe selling naked puts here to flip options on their head?
No, we're not selling naked puts, not doing anything like that, not needing huge accounts. Those can be fine strategies for the right type of investor. But in my experience, you hold a ton of risk for very little return. And the bigger problem is that, one trade going wrong can basically wipe out your entire account. And you really don't want to put yourself in that position if you want to stack up slow and steady income. Instead, I like it when high conviction trades and great returns cross paths like they do here. You see, the key to lucrative opportunities is all thanks to tapping into some of the most overlooked options in the entire market. I'm talking about the options where the strike prices are actually already well below the current price of the stock, which means the options are already profitable just sitting there in the market, and they're quietly getting more valuable every day. And when the income machine filters through all of the options available and then picks ones to send to us, it sets up the trade in a specific way that will pay us. We guaranteed to win as long as the stock stays above those strike prices. So for folks wanting the conservative approach, that's going to be the one with the highest win rate, of course. The income machine is going to dial up the options that are way in the money. That means way below the current price, but still paid right around, 250, 280, 321, like some of the examples you saw. With the balanced approach, we're still going, below the price, as you can see here, but we're able to grab about 2x the payout by simply going a little bit closer to the price of the stock. Again, usually right around $500, $600. And then we have the aggressive income opportunity. Okay. Same core principle. By moving closer to the price of the stock, we can target $1,000 plus payouts, just by getting a little bit closer. So 3 different routes, but all great opportunities on the stock. Now, here's my favorite part about all of this. Okay. Regardless of which income approach you go with, aggressive, balanced, conservative, the income machine sets up the trade in a way that will pay as long as the stock stays above that strike price. So we don't have to rely on the stock to move higher, and we don't even have to worry about it drifting sideways either. We can repeatedly target $250, $500, $1,000 plus, sometimes actually a good bit more, as long as the stock stays above that level. For example, let's go ahead and take a look at 2 more trades that we hit in May. Again, ones that I shared publicly if you guys were on Opening Playbook or in Telegram. Now, let's take one of my favorite stocks, actually one I gave you an example of earlier, on Walmart. On May 15th, the income machine populated the newest income position for anyone to take. Now, let's say you're like Mark. He's from Whitmore, Michigan. Like many, he wrote in telling us that he's retired, likes to travel, and he's pretty comfortable overall. So maybe he's not a huge risk taker, not trying to make up a whole bunch of ground, but he wouldn't mind targeting some extra income to cover the rising monthly expenses, as long as it comes with a very good chance of success. Well, in that case, when the income machine looked at Walmart, you might have gone with a conservative approach. And of course, once you click that, the income machine would have given you the ticker, the exact options, everything you need, entry price, income potential, so much more actually that we haven't even had a chance to get into yet. And so let's pull up the chart just to visually see how conservative this approach was on Walmart. Okay, so here's Walmart, pretty nice looking stock there, around $98. And here's the options generated by the income machine for the conservative approach. I mean, pretty crazy. This means that Walmart could have gone to the moon. It could have, chopped around nowhere, or it could have taken a monster nosedive and fallen 10% in a week. And anyone taking the conservative options could have still gotten paid on that trade. And in this example, Walmart actually did end up trading a bit lower from here. Okay, you can see it went down a bit, but it never came even close to compromising that position for a $277 gain. Anyone following along could have captured that payout, $277, without ever even coming close to being taken out of the trade.
Nate, that's obviously great. I love it. I love it. But what about the folks who would have maybe taken the balanced or even the aggressive approach? They probably lost money with Walmart heading down during that trade, right?
Okay, so not even close, actually. In this Walmart example, this is what the income machine does so well, is find these opportunities. For example, let's look at what folks like Rhonda might have done. Kansas City fan, which I'll forgive her for now. But let's take a look. She said she's financially comfortable, wants more of a balanced approach, and she would love to make some fun money to splurge on the 13 grandkids, which I love. So if someone like Rhonda opened up the income machine, they might have clicked on the balanced approach. The options would have been automatically picked to give folks a little extra upside, around 2 times the conservative payout potential. But as you can see, guys, there's still quite a bit of buffer room here on this balanced approach. Walmart could have fallen about 5% over the next few months. Actually, in this case, it did from the peaks fall 5% over the course of the time, and it still never came close to jeopardizing the payout there of the balanced approach. Still would have made $586 over that next couple of weeks, even as Walmart went down. Then we have our more aggressive investors, right? So we've got Lester C. from Kansas, who might like the big upside, said he can handle the swings. Of course, the aggressive options were a little bit closer to the money, going for that $1,000 plus hit on Walmart there. You can see it. And again, even though Walmart did go lower, around 5% down from the peaks, folks actually still would have hit it out of the park with the aggressive approach, $1,021 when it was all said and done on that trade. Pretty amazing, because the machine is so good at finding those safer options, even relative to being more aggressive. And that's because it's designed to set each trade in a way that will pay us as long as the stock stays above that strike price, meaning we can get paid even while regular shareholders of those same stocks we're trading are actually coughing up profits.
Well, Nate, I have to admit, this is pretty darn impressive. And I've got tons and tons of chats coming in and people just loving this. And it reminds me of what some of your top students have said about your income strategies just recently. Dan J says, I love that the S&P doesn't even have to be positive for the trade to work. He's 4-0 on the trades. Thanks for your input. How about here? Art, a retired Navy vet, says, I've been able to win 5 of 6 trades so far. My total return has been $4,650. I really enjoy the ease of placing the trades and the surprise you feel when the trade closes. Thank you. We also have Modi here, 9 for 9 on the winners. He does 2,500 in each, and he made $11,250 in 9 weeks. He says, where can I make this kind of money and let the market do all of the work for me?
Yeah, I love hearing those stories. That's one of the most fun parts of what we do here. And, giving folks a real shot at making some extra cash, even when the markets are less than favorable. I mean, those are my favorite feedback when the market's ugly and we're still getting good feedback. And today, I'm hoping to help a lot more folks like, Modi, Art, Dan, and the 1,000 other people who wrote in to start getting a chance at some of those trades. And I want to make it even easier for them by handing them access to the fully automated income machine where there's no need to waste time flipping through charts or running complex formulas, trying to pick the right options. The income machine does literally all the heavy lifting for you automatically. For example, like the next opportunity that the income machine dialed up. Okay, so this was May 23rd. The income machine automatically sourced the next opportunity. I think a whole bunch of people in the chat mentioned they made money on this one. XLC, give me a yes. You made some money on XLC with me. Now, if you're someone like Aaron, who let us know that she's working hard, busy as can be, and likes to trade things with less risk that can work in the background. Well, that's what the conservative approach is there for. It's exactly what you need, to go for those safer approaches and then gives you all the details to actually set up the trade. Now, let's have a look at the chart just so you can see how ridiculously impressive this is. So here's the chart of XLC going into May 23rd. Okay, nice trend there, which is actually why it triggered the opportunity. And here is the conservative options automatically picked by the income machine, digging through the options chain and finding you the best approach. So once again, XLC could have gone soaring higher, gone sideways, drifted a little down, or it could have basically went straight down nearly 10%. And folks would have still had an opportunity, still been well in the clear, making money. In this case, it was just a bunch of useless chop on the chart over the next week where most folks made $0. But with the income machine, it would have been totally different with $340 coming through the door, even as XLC did a whole lot of nothing. All right, let's take a look at the balance approach on XLC here, okay? Now, I had a whole bunch of students who said they're in it for the balanced approach. Might have been, I think aggressive was their most popular, but a ton of people said balanced approach. Lloyd, Mike, David, hundreds of others. It might have been the most popular. We'd have to go back and look for the number. Okay, so balance is the most popular. So I know this is going to be a very popular option going forward. With the balanced approach selected, the income machine would have given folks exactly what they needed to set the trade. And you can see there, twice the potential in terms of dollars, but still you have a pretty unbelievable amount of cushion there where XLC could have moved 5+% down and you're still going to be in good shape. And the week after, just like we showed in the last example, XLC went nowhere. Anyone following along could have collected $705 over the next week. And then last, but certainly not least, got to cover our aggressive traders as well, right? Same story with the aggressive approach. This is the one that I actually put on myself and gave out. And I saw a whole bunch of people in the chat saying they made money on it. As long as the price of the stock stayed above that strike price, which is always the case, we're in the clear, full profit, not a diminished profit, full profit, baby, as long as it stays above there. And once again, unlike with most trading methods, it really didn't matter that XLC chopped around. I didn't mind at all. It was still way clear of our level the entire time. Anyone who would have taken this one could have seen another great result, $1,287 there on XLC in a matter of a handful of days, again, as XLC really didn't do a whole lot.
Well, Nate, even with that aggressive approach you took that week, there was still quite a bit of room for the stock to fall and still hit the max payout, exactly like what happened. With the options selected by the income machine, the ones you publicly shared with many students, the stock could have gone up, flat, or even slid about 3% in a week and still paid you north of $1,000. Now, of course, it stands to reason that, if we're looking at the conservative approach, it's designed to give you the highest win rate, no questions asked. Now, if we're looking at the bounce approach, that should still give you an excellent win rate, but also a little bigger payout. And then last but not least, the aggressive approach will target the most potential income possible and still have a nice buffer on the setup. making all three routes great choices to have depending on your own personal preference. Versus being boxed in to only trade one way each and every time. You have the choice here, you have the power in your hands. And since all three approaches give you a really solid buffer where you can win even if the stock drops, now it makes sense how you've been able to nail a 93.3% win rate blended across the three different approaches with the income machine, with a remarkable 4.92 profit factor on those live trades that you've taken. Now, Nate, with real-time results like that, I have to ask you, are you sure, Nate? Are you sure that you want to hand out access to the income machine today in this room for free?
Well, trust me, I am 100% sure I want to do this. I've been talking about this for months. I'm actually pretty pumped about giving people a chance to do this for the first time ever. And in just a few minutes, I'm going to post a link right here. It'll be right in the chat where you can test run the income machine at zero cost. Okay. And then you'll be able to see today's newest income opportunities right away. You'll be able to get them here in just a couple of minutes with all three income paths laid out. And then you can pick whichever one best suits you. And if you like it, you can take it right from your regular brokerage account, set yourself up to target the next great payout just by following those explicit trade details. Now, let me just remind folks, I'm not here to tell you what type of investor you are. I'm not going to tell you, hey, based on this, you should take this certain approach. That's totally up to you, your own preferences, because with the income machine, you are totally in control. However, before I open up the free access, I do want to be clear that there's always risk when it comes to trading. There are bound to be good trades, bound to be bad ones. So as always, even with a great tool like this, never risk more than you can afford to lose. Luckily, like Graham said, most of the trades are actually relatively low cost, $100, $200 in most cases. And don't feel like you have to play catch up with any of the students who have already banked some of the great returns with the income machine. Folks, your story is just getting started today, okay? So you're not playing catch up. You're starting now and building a plan. I promise you have plenty of opportunities to target 250, 500, $1,000 plus along the way if you're willing to be patient and let these opportunities come to you. Like the next trade, this one was on XLF. Again, I know a bunch of people in the chat already talked about making money on this one as well. This was going into the last week of May. XLF was trading nicely, had that little pullback, and on May 23rd, the income machine alerted the next opportunity on XLF with all the information ready to take the trade. Exact options, hold time, break even, and even the calculated odds of success right there for you. So anyone who took the conservative approach could have set the trade, had about 7.5% buffer room on that position, $247 as XLF continued to go higher there, as you can see on the chart. Balance approach would have got about 2 times the potential there. Still had around 5% the buffer. I mean, just a ton of room, and walked away with $548 by the end of the next week. And of course, lastly, we had the aggressive approach. Still could have fallen against us, and things still would have worked out really great there, landing a crisp $1,176 in just a handful of days on the more aggressive approach.
Well, Nate, I'm really starting to fall in love with this income machine, and I really do wish this is something I had like 5, 6, 10 years ago. And I'm sure I'm not the only one in the room thinking that right now. Having a real chance to target $250, $500, or even $1,000 each week in all sorts of market conditions would definitely make a big difference for a lot of people right now. I mean, based on the hundreds, actually thousands of stories we heard from folks writing in over the last few weeks, I think the number one concern most people have is not having enough cash left over to start saving for retirement or continue saving. And that's because the bare necessities of life, like healthcare, food, housing, all of that stuff are eating up almost all of the monthly budget, leaving millions of people feeling like they're always one step behind. But by putting the income machine in the pocket of the folks tuning in right now, well, that gives people all over the world a legitimate shot to target $250, $500, or $1,000 each week based on their own preferred approach. And your goal, Nate, is that they soon start finding themselves one step ahead instead of one step behind, with new high conviction income opportunities coming their way each and every week. In fact, guys, each and every day you can check in and there's going to be a new opportunity for you. Like with the opportunity from the income machine on April 18th, this one, the balance approach you took on XLP, well, that could have automatically cashed out for an extra $746 even as the ticker fell. Now, for folks like Douglas C., maybe that's an extra $700 that could have helped cover the increasing housing costs that a lot of people have been experiencing. Or how about the next one here? As a conservative approach you took on April 30th, And this one would have paid a cool $423 when the stock went up. Worked out perfect there. Now, for people like Christine, who told us that she's excited to head into retirement, but also nervous with the loss of funds from her pension, well, that $423 could have relieved some of the day-to-day stress, maybe offered a little bit more enjoyment out of life. And we can go on and on and on. Like the next one here, guys, take a look at this one. Here we had the aggressive approach on May 1st. Nate, you got this trade, you sent it out, you took it. Let's see what happened here. Well, folks could have banked $1,071 on this move here. Now, for anyone like Herman V, who mentioned that he's retired but wouldn't mind targeting a little extra cash to, add some breathing room with the monthly expenses, well, an extra $1,071 could have been a great cushion, nice little padding in the wallet. So, Nate, tell us, how can folks right now who are tuning in right here in this room get in on the newest income opportunity today, targeting the next $250, $500, or even $1,000 payout? Let's get down to brass tacks.
All right. Well, I know a lot of people asking, hey, Douglas and Todd, and a couple of people who said they're here in the room. Awesome. Now, if you want to go out there and, basically find the next income opportunity, it's actually a pretty grueling task. And that's why I built this tool. It's not like you can blindly pick any stock and any option to make it happen, or I think anyone would be, having a 93% hit rate on income opportunities. First off,